Welcome back. So what we're going to do in this video is we're going to get an overview of the products and services piece. Because as I previously mentioned, those three areas where QuickBooks setups can go awry and cause headaches later on: chart of accounts, products and services, and banking. So let's get an overview of this products and services piece. And to do that, we're going to go back into Craig's landscaping. So to access the products and services section, we're going to go up to our old friend, the gear icon, and we're going to go to lists and products and services. Now you can also access this from sales over on the left navigation bar, right down here at the bottom, products and services. So what we're looking at here is the overview screen of Craig's products and services. So think about products and services as like everything a retail store has on their shelves. Every single different product that a retail store has on its shelf is an individual product in QuickBooks. So a product is usually a physical thing. You could pick it up off the shelf, or you're going to manufacture it in your factory. And a service would be something like dog walking or accounting services. So whatever it is that you are doing in your business, it's either going to be a product or a service, and it's going to be set up individually in QuickBooks. What this allows you to do is to create an invoice by choosing these different items. And it's going to pull that into your invoice and automatically put in a description. And because of the way products and services is set up, it's automatically going to post things to the appropriate accounts. And that's the part where it can get a little squirrely if you don't understand the question that QuickBooks is asking you as you're setting up these products and services. So we're going to take the mystery out of that. So the first thing you're going to see on this little dashboard for products and services is a low stock and out of stock message. So QuickBooks is alerting you that inventory items that you have set up are either low stock, so you better order some soon, or they're out of stock, so don't sell them to your customers. This is coming from the way that you set up your products and services and how you tell QuickBooks you want to be alerted. So if I set up a product, when my inventory for this product gets below 10, I want you to tell me. And that's when it will turn up into the low stock button. If I don't order the thing that QuickBooks told me to order, and then I sell more, I'm going to end up with an out of stock. So this will alert me that I have one item or 10 items that are out of stock. Now, if we come down here into this products and services section, you're going to see, let's start with type. So it looks like for Craig's business, he has services and he's got inventory items. He doesn't have any non-inventory items or bundled items. But this is a listing of everything that he's selling to his customer. So he's selling design services. So when he's doing an invoice, he can choose design in that invoice, and it will automatically bring up the sales description that he's got set up, custom design, and it will bring up the sales price. And then all he needs to do is enter the quantity. So one of the things that you can do with QuickBooks Online in your products and services is you can build in a structure where you can have a main item, and then you can have sub-items, and then those sub-items can have sub-items. And it's a great way to keep things really organized. So in Craig's case, he has a category called design. And then within that, he's got design, lighting, rocks, and services. And then he also has a subcategory called fountains. And within that subcategory of fountains, he has some products and services that are specific to him creating a fountain for a customer. So we've got concrete pump and we've got rock fountain. So if we go into, let's just pick this concrete one, we'll say edit. So here's what we're looking at behind the scenes with this particular item. This is a service that he's offering. It is a design service. It's set up as a service item. He called it concrete. You could call it concrete design. That might make it clearer. If there was a SKU or some other identifying number that went along with this, you could add that here. And then you'll see his category is design fountains. So if we click this, you can see here's the main category, design, and then fountains is a subcategory of design. And he's done the same thing with landscaping. He has landscaping as a category and then a subcategory for sprinklers. Here under the description, he's got checked off, I sell this product or service to my customers. So what this is saying to QuickBooks is, I'm going to be putting this on an invoice. My customer is going to be seeing what's in this box. Under the description, he has concrete for fountain installation. When he creates an invoice, that's what's going to turn up in the description line on the invoice. And in this case, he has 0 set up as a sales price or rate. Now, this could be because concrete prices change regularly. If it was something that was pretty static priced, then he could put in $75 or $100 or whatever it is. That would make it really easy when he went to do his invoice because the price would come up automatically. But if you've got an item where the price changes based on some quantity or based on volatility of pricing, then you can leave this blank and just fill it in individually on the invoice. That slows things down, but it may make things more accurate depending on what's going on with the business. So the next part we're going to talk about is the accounts that are being impacted by this particular item. So you'll see right here that there is an income account. It's asking us where we want that sales revenue to go. What income account do we want to use? Now, if you're working with a business that has one revenue account, it's always going to be the same thing. But as we talked about with Craig's chart of accounts, he had like 20 different income accounts. So now you've got to figure out which one we want this to go to. So when we click on the down arrow, it brings up all of the accounts. And we want to look specifically at these accounts that are income accounts, revenue accounts. So this particular item is set up to go to landscaping services income, which has a sub-account called job materials, which has a sub-account called fountains and garden lighting. So that's where they are assigning this particular item to go in the income for this company. For this item, we have this set up for sales tax as taxable standard rate. And when we get to the part where we go through setting up sales tax for our sample company, we'll go deeper into this. But what we do is we set up a standard sales tax rate for the location where this business is doing business. And then you'll see there's purchasing information. I purchased this product or service from a vendor. See, right now, there's nothing here. But if I click on this, it's going to bring up a whole new section for this item. So this is a case where we are purchasing something and then reselling it to our customer. So if you are a retail store and you are buying merchandise, like Walmart buys merchandise from all over the place, we need to capture that part of the information for this item as well. So let's think through the accounting on that. Before you can sell this to your customer, you have to buy it. So when you buy this item, there's going to be a purchase transaction. And when you sell this item, there's going to be a sales transaction. So there are two parts to every transaction when you are buying something and then selling it. So the description that we would be putting in this box here would be the description that's going to appear on purchase forms, like a purchase order, for example. So let's say we're ordering a specific part from a vendor, and we want that description to match what the vendor would be expecting to see. So if your vendor has a catalog, you would be putting here the description or the part number that your vendor would be expecting to see. So that's what this description is for. This is for the vendor, so that when the vendor looks at that purchase order, they know exactly what it is that you're ordering. So when we enter the cost, this is going to be based on what the vendor has told us that we are going to be paying for this. And just like with the sales rate, we can leave this blank and fill it in later. But if we're doing something with purchase orders where we're carefully tracking what the vendor tells us the price is going to be versus what we're getting charged for, then we're going to enter that cost here. And again, if it's something where the price is very volatile, you may want to leave that blank and fill it in when you actually do your purchase order or enter the bill from the vendor. Now, the expense account is where you want that expense, that item, to turn up on your profit and loss statement, your income statement. What expense do you want this to be assigned to? Now, if this was an inventory item, we would be assigning this to not an expense, but to the inventory asset account. In this case, he's putting it to purchases. But let's say he wanted to put this instead to job materials, which is really kind of where it seems like it would belong because it's for a job. So maybe this is going to go to fountain and garden lighting. But in this case, we're just going to leave it as purchases. And then here under the preferred vendor list, you can add a vendor if you always buy your concrete from Al's Concrete Company. You can add that here. And what this does, it doesn't limit you from buying from any other concrete company. What it does is it's a way to help you remember where you order certain products from. So if the boss comes in and says, hey, can you order me some whatever, you can go to this product or service and say, who's the preferred vendor? Where do we usually get the whatever from? And that's just a little helpful organizing kind of thing. So you can leave that blank, or you can put in a preferred vendor if you have one. And then you would save and close. And I'm just going to get out of here and come back to the main list. So if you need to add a new item, you're going to come up here to the green button and you're going to click New. Now this is another really important piece of setting up items, is making sure that you've got the right type of items set up. So we have 4 choices. We've got inventory, non-inventory, service, and bundle. So let's start with the service one first, because that's the easiest one. So a service is something that you are providing for your customer. You're going to do some dog walking for them, or you're going to do some labor or an installation. So those are service items. Now, a bundle item is an item where you are taking several things and bringing them into one thing. Let's say you're in the gift basket business. You're going to have a gift basket that has a bunch of different things into it. So that's a bundle. And within that bundle, you're going to have all of the different items that you need in order to create that gift basket. So all of those different things are products that would be set up individually. Now the other 2 items, inventory and non-inventory, these can be a little complicated because sometimes there's crossover. Do you call it inventory? Do you call it non-inventory? And it's going to depend on the business. It's going to depend on the person making that decision. Well, you know what? Actually, hold on for a second. Hey, Terrance, do you have that that inventory graphic you were working on? Is that ready? Could you send that over to me? All right. Hold on for just a sec. Okay, so this is a graphic we came up with to kind of help you make that decision, whether it's an inventory item or a non-inventory item. So ask yourself these questions. Do you need to keep it in stock? Do you need it to appear up on that yellow warning, you need to order more, or red, you're out? Do you need to keep track of whether that is in stock or not? If yes, then call it an inventory item. If you don't need to keep track of it, you don't need to know whether it's in stock or not, it's not that big of a deal, then you can call it a non-inventory item. The second question to ask, are you selling it to your customer? If you're selling it to your customer, then call it an inventory item. If you're not selling it to your customer, call it a non-inventory item. So if you answer yes to either one of those questions, call it an inventory item. If you answer no to both questions, call it a non-inventory item. So here's the thing with inventory and the way that it works. When you call something an inventory item, it's an asset. So it would appear on your balance sheet as an asset amount. If you call it a non-inventory item, it's going to come up on your expenses on your profit and loss, your income statement. So when you hold something in an inventory account, it does not hit your expenses. So it doesn't lower your profit. We don't move it out of the inventory account until it actually sells. And when it sells, that's when it moves over to your expenses, and that's when it's going to impact your profit on your income statement, your profit and loss. So it's an important distinction, because if something is inventory, you're not paying taxes on profits that you don't have yet. As soon as you move it out of that asset and into expense, that's when it's going to impact your profit. But when you're setting up an item, if you come back to these 2 questions, then it will help you to make the determination of whether it's inventory or not inventory. Thanks, Terrance. That was helpful. So let's take a peek inside setting up a non-inventory item. So we call it whatever we want to call it. We're going to call it test. If there was a SKU or some identifying number, same thing, we're going to add that in. And then let's look at our categories. We could, in this case, this is a non-inventory item. Maybe it's something like work gloves. You're not going to sell the work gloves to your customer, but you certainly need to have them in order to do the job. So we could set up here a new category for supplies, for example. So if we wanted to set up a new category for that, easy to do. New category is going to be called supplies. Save it. And then if we wanted to set up a subcategory beneath that, we could say supplies, add new. And because this is a non-inventory item, it's not something we're selling to our customer, we can unclick this. And then you see when you unclick it, that information goes away. You no longer need to worry about what the income account is. So when we're talking about purchasing a non-inventory item, when you check off the I purchased this product or service from a vendor, again, you can put in the information that you want to put in here. Maybe there is no preferred vendor when you buy your work gloves. Maybe you just pick them up by the gross when you find a good deal on them, and the cost is going to vary. So you can add that when you purchase them. And again, you can pick the expense account that you want this to go to. Maybe you have a supplies expense that's specific for job materials, for example. So if we come up here to job materials, maybe under job materials, we're going to add a sub account that's for supplies expense. And then we would save and close. And then let's say we wanted to edit one of these items. Let's say we want to edit landscaping, gardening. It's going to bring us back to the same screen. And then if we wanted to change the name, we could do that here. If we wanted to change the category, if we wanted to add a sales price to it, or we wanted to change any of the items that we set up previously, we could do that very easily right here. Now, what if we decided that we were going to stop offering a particular product or service? So in that case, all we need to do is come here to where it says edit. We're going to hit the down arrow, and we can make this item inactive. We're no longer going to offer this to our customers. Or let's say we want to offer a similar item. We're just going to make a few changes to it. So maybe we have a service that we offer, and now we want to offer a premium service. And then we can just duplicate it and edit it to show the new details. We're going to call it something different. It's going to be the premium service or whatever we're going to call it. And then if we needed to adjust any of those other accounts and pieces, the prices and all of those things, we can do that here. Now let's take a quick look at setting up an inventory item. It's a little different because we have to count stuff because it's inventory. If we're setting up a new item, let's call it rocks. We're going to sell rocks. The category, again, we're going to assign it to a particular category, and maybe this is going to be assigned to landscaping. So the first thing we need to know about this item is, do we have any of these already in stock? Did we just get an order with rocks and now we're going to enter our rocks quantity here? So if it's 0, we're going to say it's 0, or if it's 100, we're going to say it's 100, and we're going to tell it what date this is as of. And then the reorder point, maybe we're going to say when we get to 100, we want to make sure that we place an order. Now, because this is an inventory item, it automatically set it up with the inventory asset account called inventory asset. So we've already taken care of that for you, taken the guesswork out of it. Now, there may be cases where you want to have more than one inventory account. So for example, if you are manufacturing something, you may have a raw materials inventory account, a work in process inventory account, and a finished goods inventory account. So you can set up additional inventory accounts if there is a business reason to do so. In this case, we're going to keep it simple. So here in the description box, this is what's going to be on the invoice. So whatever you want your customer to see is what you want to call this here. And in this case, we're going to call this, I don't know, walkway rocks. And the sales price, again, if this is something that's going to be changing regularly, you may want to leave this blank and enter it when you do your invoice. If it's something that's pretty standard, you can put the price in here. And then here in this income account box, it's automatically bringing up sales of product income. And that's because of the way this is set up in our chart of accounts, which is why we started with that first. So if we wanted to add an income account here, we could. If we wanted to change sales of product income to be some other name, then we can do that within the chart of accounts. And again, as we saw before, it's bringing up the taxable standard rate for sales tax. We're going to leave that alone. And then here under our purchasing information, we would have the description that the vendor would be expecting and the cost if it's something that's a stable price. And you'll see that it automatically assigned this to a cost of goods sold account. And that's the only choice that it's giving us. And this is again because of the way that it's set up in QuickBooks. And again, if we had a preferred vendor, we could enter that here. So that sets up our inventory account. And when we come back to our main screen, you're going to see that this has changed. So now it's telling us we have a reorder point for that item that we just set up of 100, and we currently have 0. So that's saying, hey, by the way, you should order some of that. And when we click on that red button there, it will show us exactly what it is that we need to reorder. So that's a really handy feature. So that's an overview of products and services. So when we do our sample company, we're going to be setting everything up from scratch. So you'll see how everything is going to be connected together. Starts with the chart of accounts and then goes to the products and services. And that's the basis of how things are going to look on the financial statements. And it's the key to making sure that you've got accurate financial statements. Things are categorized the way that they need to be. Now in the next video, we're going to go through that third headache part, the part that drives people insane. We're going to fix that. So I will see you in the next video.